Morning all, how are we all doing? Back again, another day. Feeling a bit better today, worrying. I upped my tablets yesterday that the doctor gave me, and I actually had a good night's sleep last night. Well, till 5 o'clock this morning, so I class that as a good night's sleep, getting through to 5. So yeah, hopefully my arm is on the mend a little bit. Still numb, still hurting, but not as bad as it was. So we will see. So we've had a bit of news this morning. The CPI figures for the pound came out this morning. 10.1 on a forecast of 10.3 year on year. So it's slightly better news than anticipated for the pound, but still massively bad news because it's obviously a target of 10 and of 2 rather, and we're on 10.1. So it's good. It's good for the pound, but not going to be great for the pound. So we've had a bit of a negative reaction this morning on the pound. Oops, sorry, one. If we have a look at the pound pairs. So all they've done really is move down a little bit on the news. Some of them more than others. Euro pound has gone through the roof. The Euro pound actually has had a massive reaction, but yeah, overall negative movement on the pound, mainly because it's obviously not good. 10.1 inflation on a target of 2 is a complete miss, isn't it? So it doesn't matter how much it comes down by, it's still way, way, way higher than it should be. So yeah, not great. But yeah, so the pound pairs have all had a bit of a drop. Anybody that was on any of those pound shorts, like the pound US dollar short, for example, that's all coming down very, very, very nicely. That was an H1 extension. Where's my pen gone? Update available, eh? Ignore. So I had a couple of shorts on that, which I got out of. And if you got in it again on the second extension, anywhere around there, you should be able to get out of that now on that propulsion gap. So all good for that. The other news we've got basically today is the core retail this afternoon for the US dollar. So 1:30, which is an hour ahead of the market open, we're going to have retail sales. That will have an impact on the US dollar. That one generally tends to go correctly. So if it is a positive, we do get a positive reaction. Negative, we get a negative reaction. So quite often this one actually does what it says on the tin. If it comes out green, we go up. If it comes out red, we go down. But at the moment, everything negative coming out about the US dollar is basically tanking it. So I'd be a bit wary of any green news and actually trying to get into long positions, but we'll see. We've got Lagarde speaking as well a bit later on as well. Not sure she's going to say anything particularly exciting, but we'll see. And then before tomorrow morning, we've got unemployment claims for the Australian dollar. So we've got that coming out as well. So the forecasts basically are for retail sales to go up. As you can see, we were negative 1.1s and they're forecasting 1.9s and 0.9 increases. So as long as we get an increase, it's going to be positive. If it doesn't increase by the expectation, it's still a positive. So potentially good moves this afternoon on the US dollar pairs as well. Overnight news, there wasn't really much to look at. Apart from the Fed, actually, there was a little bit. How long have we got? 3 minutes till the news, until the market opens. So there was actually a little bit of overnight news in the fact that the Fed came out and said a year-end federal fund rate of between 5 and 5.5 appears reasonable. So we were looking at 5.25 potentially being the terminal rate for the US. They seem to be saying pretty much the same thing there with a 0.25 deviation either way. So at the moment, we're on 4.5. So we've still got a good 0.5 to 1% increase potentially for the Fed. Where are we? US dollar. Oh, sorry, we're 4.75, aren't we? Because we just had a rate increase. So yeah, so 4.75 now. So we've got another 0.75% potentially. So that's another few interest rate rises. So if you think this is towards the end of the year, they're looking at that as being the max. Doesn't mean it's going to happen at the end of the year. They could go 0.5% in March and 0.25% in April, and that's it. We're done. So it means we've got potentially, I think, another 3 rate rises coming, which again is bullish for the US. So we had an inflation change, which was bullish. Unemployment was massively bullish. GDP is okay. So everything's going the right way for the Fed. So it should be good. So that's the only news we had overnight. Pound US dollar's coming down pretty hard. So this morning I'm running the new version of the opening range breakout EA. This is the one that trails on a percentage of the opening range. So my pre-market 15 is there. So we'll see what we get today. Really nice opening range breakout yesterday on the Dow. Made 4K on that yesterday. It was 4K. Where are we Dow? Which one was it? Not that one. Not that one. Not that one. Where's it gone? I can't find it now. Dow. Anyway, but yeah, but had some really nice breaks on the Dow yesterday. To the upside and downside from that 15-minute opening range. So the ORB yesterday was, where are we, 430. 330. It's there. So had an initial profit on that move, and then it broke back down again and collapsed. So one of the set files made really nice profit on it. The other two sort of break even, slight losses. And actually, they're not break evens; they were slight losses. So, but depending which set file you ran, that's pretty good yesterday. Potentially, or it was a little bit of a loss. But wasn't particularly bad, put it that way. Morning, everybody. Haven't said morning to everybody. Morning, David. Morning, Eric. Morning, Ro. Morning, Diamond. Morning, Luke. So DAX, quickly looking at the DAX. There's not much point of looking at it on a daily basis, really, but we are still kind of bullish, but we are actually sideways if you look at this. So this control candle, we have not broken out of. We're still in it. So yeah, no real directional bias either way at the moment on this. It's just kind of flip-flopping around in the middle on the DAX. Nice days though. We got decent days being put in size-wise, but no directional bias at all. So still sideways, waiting for the moving average, I suspect, to catch up with price and then catapult us that way. I've got a feeling this, I don't know, I just get this feeling we are actually coming out of this bear market. Soft landings everywhere, no recessions. It's all looking pretty bullish, isn't it? But it seems very hard work to make a bull move. So ADR on gold. Oh, AMR on gold, sorry. Monthly range just been hit on gold. We'll have a look at those in a minute. So high rejection so far on the DAX. Looking for a breakout to the downside. Morning, Adrian. Saying that, all that this morning, now my arm is absolutely aching like hell. It's impossible to concentrate on anything when you've got this constant either dull ache or pain in your arm, literally 24/7. Trapped nerves are the worst thing I've ever had in my life from a pain illness perspective. I've had COVID, I've had all sorts of stuff, but this is just unrelenting. It just doesn't stop. And there's nothing you can do about it at all. It's literally, it's a trapped nerve. Wherever that nerve goes in your body, the entire part of that body is just going to hurt. And there's nothing you can do about it. when it's not even trapped. Actually, the doctor was explaining it to me. It's actually just an inflamed nerve. It's got this little hole in the vertebrae that it has to get out of, and it gets inflamed. So what it's doing is constantly pressing against this hole that it gets out of your vertebrae and sending constant signals, and those constant signals emerge as pain. But literally, you just have pain all the time. The only thing you can do is knock yourself out with as many drugs as possible and just wait for it to go down, which, depending on who you speak to, takes somewhere between 1-2 weeks to maybe 3 to 6 months. If I have to put up with this for 3 to 6 months, I don't know what I'm going to do. But there are stronger drugs. I spoke to my doctor yesterday, and he's got more drugs he can give me, even better. So I'm having a phone call with him on Friday to see how progress is. But I have to say, upping the dose of the drugs has helped a bit. Okay, 15-minute opening range has not broken. So we are sitting inside our ORB, pre-market ORB at the moment. Here's your 5-minute range going in. I haven't got a timer on this one, have I, for some reason? I haven't got any indicators on it. I haven't got ADR on it or anything. I forgot this morning to put all my indicators on. Never mind. Let's have a look at the DAX over here. So we've got this propulsion gap up here to aim for. So there's our gap play, basically. That's yesterday's close all the way up here. So, all of this is broker data. So we have got a gap play on the cards. There's roughly a 45 to 50% chance of gaps being filled on the day. So there is an opportunity for a gap fill high. If we do break out the highs, that would be target. If we break out the lows, we're looking at yesterday's low, which is here. So very little distance to yesterday's low. We may well run into a brick wall going south if we do that today. So there's your 5-minute opening range in. So if you're taking the 5-minute OR, that is it. Morning, Warren. Gentlemen, I had back pain on and off for 20 years before your surgery. Yeah. Trapped inflamed nerve in the shoulder for me too, for almost 3 years. Going to a chiropractor helped massively. Yeah, I went to see an osteopath on whenever it was, Monday, I think. Yeah, and basically because it's there's nothing much he could do about it. He can manipulate it, but manipulation doesn't help with inflammation. So very little that can be done for that part of it. But ORB's gone to the long side. So yeah, there are things they can do. They can do steroid injections. There's other things that can be done. It's just they don't want to. They don't want to go down the most drastic route until you've been in pain for weeks, and then they go, all right, and then we'll go on a waiting list. And at some point you get fixed. But anyway, I don't care about it being numb. It's just the pain. It just stops you concentrating, and the sleep is the main thing. Not being able to sleep. You wake up half dead, and when you're doing something like this where you really need to concentrate, it's not good at all. Osteos are great, but if they offer to fuse anything, run. Yeah. Yes. Can't remember the last time we didn't break the pre-market 15 before the 5 minutes. Yeah, I know this is a very flat open. Well, it was a very flat open, but we certainly seem to be going for it now, so that's good. So yesterday's close, depending on when you take yesterday's close, is up here somewhere. So obvious area for target is the propulsion gap this morning. I'm running a trailer on the opening range. So the trailer is currently just over 220 points. So I would imagine I will get stopped out before we get there. Because it's unlikely not to pull back by 20 points on the way there, unless we have a, huge move, but we'll see. I'm also going to be taking the 15-minute opening range as well. So depending obviously what happens with the next candle, that could be the 15. We'll see which way it wants to go. We'll look at what the US indices are up to. So NAS is pushing long. So is the S&P. FTSE is bearish. Big moves down. This will be obviously related to the CPI figures. So FTSE you can't really compare to the DAX. We had CPI news this morning. Dow's a little bit bearish as well. So the DAX is actually the only bullish instrument really at the moment. The rest are not really going guns at the moment. Looks like I'm going to stop out on this. So it's rejecting the pre-market highs at the minute. Really weak, isn't it? So buyers tried to rally in the first 5 minutes, failed. Second 5 failed. Just going to stop out by the looks of things. Small loss, 0.5 point. Maybe not. Okay, so there's a 10-minute opening range. Just going to watch this candle, and then we'll do have a look at all the FX pairs and everything. Just want to see this, see if this can rally and stay inside this candle. Because if we can stay inside this range, there's a good chance we'll get a breakout, 15-minute breakout to the upside as well. Looks like it wants to do the gap today, but it doesn't seem to be an awful lot of volume, does it? No consensus at the moment. We need the obviously the difficulty with this strategy is you never know when the opening cash balance trades are in. You never know where the speculative trades start and the commercial trades end. So it's a case of what you usually see when we see the speculative moves starting is we see a large movement. They get it going basically, and you get a propulsion candle. But if you get a propulsion candle on the initial 5 or 10 minutes, obviously you can't tell whether that is speculative or whether it's just orders being placed on the part of commercial clients for the banks, can you? So when you've got very push and pull price action like this, it's very difficult to determine whether or not we've actually started any speculative moves or not. ADR on euro pound. That is a long anyway, so tricky one this morning. Not a lot of movement there. It's on my other monitor, one sec. Let's monitor that over there. So basically with this, with the pre-market, if we close and it stops me out on this position, if we close back inside here anywhere, I'm going to enter for a second long anyway. So just take a tiny loss on that. It's only $50 or something. But If it pushes, hopefully we'll be safe for a run, but we'll see. Right, so let's have a look at where we are with ADRs and everything. Obviously, we just had the euro pound. We'll start with the euro pound. That's just hit ADR. So this is a long. I've really got this annoying thing at the moment. I've tried to fix my stream layouts, and I had one set up for web, but what I have to do is turn off my MT4 area to actually see the web. So it's difficult for me to flick between the website and the MT4 at the moment, but I will do my best. If we have a look at the sentiment and everything for euro pound, when was this updated? 6:57. So that's 7 o'clock update. That's the latest one. So euro pound is cot long, retail short. So it's retail sentiment. Basically, they are long on this as well at the moment. So, but obviously, this is a news event that's caused it. So when we're looking at the retail sentiment, this is just general positioning. When you get a news event that goes in line with retail sentiment, that's fine. Yeah, they're all long it at the moment. Good for them. Retail's making money. Fantastic. They're not making money because they're right. They're making money because the news caused the spike in their direction. So there's a 50-50 shot, isn't there? Whenever you take a position in the market, of you being right or wrong. They're right on the news. Well done. So you can't take news into account when you're looking at retail sentiment. But at the moment, the market is saying we should be shorting euro pound. However, we want to be long from a cot positioning perspective. So there's no real bias either way on this one. This is one of those that is, we want to long. At the moment, it's saying we should be shorting it. So we need this basically to flip over to here. That's when we start to go for it. So it's things like the euro yen. So there's no advantage there. Bias scorecard on the euro pound is range bound. Again, cot is a long. Fundamentals are mixed. Euro's fundamentals are still not that good either. Morning, Seymour. And we've got retail skewing the figures to the downside. So there's no real advantage either way on this one at the moment. So when we're looking at euro pound from a trading perspective, I would rather be longing it than shorting it at the minute. So there's a 15-minute range in. So we've got an inside bar at the moment on that push to the upside. We're just putting a bearish engulfing in. Looks like I'm going to get stopped out on this one. Here, yeah, so stopped out on that initial opening range. See if it goes off without me. So yeah, I want to be taking longs on it basically. So not sure I want to be mean reverting it. However, when you're looking at mean reversion off of news, it will quite often come back and retest before starting a new leg up. As you can see, the Euro's had a very weak week. It's not had a good week recently. We've had a bit of a drop or pullback on the Euro pairs across the board. Or they've gone into sort of a range and are dropping. But we're having a nice strong push this morning against a few of the pairs. So Euro's really woken up, which is good. We've got Lagarde speaking this afternoon. So from a mean reversion perspective, obviously every time you get an ADR, there is a mean reversion opportunity there. Whether it's with trend, against trend, with sentiment, against sentiment, the fact that it's moved so fast and so hard, there will usually be a profit take on it. It's whether or not that profit take goes far enough for you to make money. You can see where obviously the previous low potentially will be, which is the high of the Asian session before the news came out. So that would be where I would look to start adding a long position. But if you want to short it, the mean reversion is down to there. However, the market reversal alert is a long way away because of the strength of this movement at the moment. So when you get a reversal alert that is so far away on an ADR here, it should ring alarm bells to you to say, hang on a minute, this is really strong. Do I really want to be mean reverting this? Yeah. Look at the green candles. It's green, 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 green all the way. So this should be telling you this is a massive long at the moment. Yeah. We don't really want to be jumping in short. So in these sorts of instances, what I would tend to do is look at where we may be turning. So we've got resistance potentially coming up here, where exactly we are at the moment. So again, potentially that is actually a good spot to start a mean reversion from. Failing that, next level is going to be there, or potentially there. Yeah, so there's a few other levels coming up. That is probably, yeah, that's the strongest level. Somewhere there. Let's just put it on there. There. So this area here, yeah, been tapped into multiple times. So this whole zone at 175 ADR. So for me, if you're going to mean revert this, it's going to be very difficult to get in here, obviously, because you're not going to get a reversal alert on it. It's not. So if you wanted to get in here, you're going to need to take price action. So obviously, at the moment, we're sitting on an inside bar, which is a pause candle. Break of that low potentially, and hold below that low is kind of like a market. It's a mini market structure reversal. If you went down to M1, you'd see that as a market reversal alert. Yeah, that low would be a market reversal alert on M1. So that is what you would basically take if you wanted to short it from here and be looking for somewhere in the region of 25 to 40 pips to the downside, roughly half an ADR. However, the best play for me would be to see a 175 ADR on this today. That'd be lovely. If we can get up to here, and we've got 150 is obviously this level here as well. So that's where I'd ideally love to start shorting that. So if this thing can just carry on like that and get absolutely parabolic, extended, will be extended on the hourly by the time we get up here. Yeah. All shooting straight up. You know, every time you get a parabolic move like that, you get a profit take move like that. Parabolic move, profit take. Parabolic move, profit take. Parabolic move, profit take. That's what we're getting in on, the profit take. So that one's potentially a good setup this morning. Oh, DAX, you're horrible. So it stopped me out of the DAX basically. And now it's thinking about going long, but it's not particularly pretty price action, is it? Look at this 15-minute opening range. It's not. There's just no volume today. Unless it picks up, it's going to be a bit of a slow grind today. And I think if you've got any kind of tight stop loss on this, you'll probably find you'll get stopped out with lots of little losses as it chops up and down. Not particularly parabolic, is it? Euro pound, obviously that one's hit already. Euro odd has also hit. So we've had a 125 ADR on that one. M5 reversal alert is just about to trigger on this one at 125 ADR. So that's potentially a good one as well. Euro odd is also range bound, but it's more long than short because we've got cot on side. So I would be looking for long opportunities on this. So, you know, that you should have been in it long already, really. And that will be your exit. But mean reversion, lots of targets on the way down. If you look at the M15, ADR low. Yeah, this isn't particularly. You've got a couple of areas here where we've potentially got a bounce from. So I would say not the best mean reversion opportunity in the world, but may well work out. It's nicely extended. If we look at this on higher levels, we're tapping into this propulsion gap, which broke that low, 150. But again, you know, looking at this propulsion move here, I wouldn't say that there's a lot of sellers left in there because all we've done literally for 5 days is go sideways. Yeah. So anybody that is selling hard here hasn't managed to make any further progress. Unlikely they're going to be in it still. So that's probably exhausted, I would say. In which case, obviously, you'll be looking coming back up to these highs. So think this is likely heading here. So what's it going to do on the way? If it's going to put in nice market structure, it's going to pull back into highs. So what I would personally do on this one was try to get in long on it after a pullback. So not particularly keen on that one as a short. any of these euros, to be honest. I think the euro is going to be fairly bullish. We've also got Lagarde speaking later, don't forget. So Lagarde's talking at 2 o'clock this afternoon. So if she comes out anything bullish, we're going to be off to the races, aren't we? Euro New Zealand, again, ADR hit. We just got a nice bearish engulfing in. There's your 5-minute reversal alert. Same thing with this one. We're tapping into this propulsion move here. That didn't actually break that low. So again, we're extended on the hourly. So there's a potential for a pullback on this, but not necessarily going to be a deep pullback. Thanks for following, Sam William. So yeah, difficult ones, these euros. I'm long biased on these, so I only will be taking longs on them. So taking a mean reversion on them is quite difficult. However, the whole point of ADR hits is exhaustion pullbacks. So they, even if you're going counter trend on these, they work a lot of the time. Long-term bias, though, on all of these euros is kind of range-bound, slightly long. So if you look at the COT on all of these, look at the bias scorecard on all of these, all the euro pairs are all long, apart from Euro New Zealand and Euro US. So Euro US, obviously, because we're expecting a strong US dollar. Everything else is a range-bound or slightly long, based on mainly COT. So the market participants are positioned long on the euro long term. So you ideally want to be looking for long entries if you can. But there's nothing to stop you taking mean reversion trades in between. Yeah, mean reversion trend is much less important because obviously what we're doing is we are trading exhaustion. However, I would say with this one, there's not a lot of exhaustion here, is there? Look how evenly this is traded. Not very exhausted, is it? It's been up and down, up and down, up and down. There's no reason why this couldn't just keep doing that. What I like are the parabolics, where we need to take a breather. So not as good that Euro New Zealand either. Pound odd. That's hit to the downside. This is a short. Oh, sorry, no, this steps to the upside. So yeah, this is a potentially good short opportunity. So pound odd is range bound, although there's no COT bias. There's no real bias on this at all. There's no COT bias. There's no retail sentiment bias. There's no bias at all on it. So M5 reversal alert, you've kind of had that this morning. It's a bit of a messy one. Yeah. Sometimes you get these big drawn out ones. The reason for that is the last down candle that made the high is actually the candle that made the high. So this is because this is a news event. That's why you've had that so large like that. Your actual reversal alerts would have been there. But obviously that's not really a reversal alert of ADR. That's a news trade. So, but yeah, I like the pound short regardless. So I quite like that as a short if you want to get into that. M15, you're going to get reversal alert in a minute. Again, it's a weird one because the down candle actually made the high, which is not normal, obviously. But yeah, like it as a short. If we look at where we're heading on the pound odd, longer term, obviously it's been very range bound, but obviously it's starting to come down now because the pound is forecast to go into recession. So targeting lows, just we are expecting if market structure is going to stay as it is, we would be expecting to break lows. So all the way down, you can take this as deep as you want to go, as long as you want to hold it, really. But that's a pretty good setup from an ADR perspective. Aussie dollar Swiss as well. That's hit to the downside. So this is a tricky one. Aussie dollar Swiss. It's very, very range bound. We've had a big move down because the Swiss franc has strengthened up after its massive weakness on losing all that money. Since then, we've gone nowhere. We're completely sideways. So all we've done really is take out that high, that ADR, yesterday, and then drop back down and take out this low. So we've got support potentially coming up here. So this is a pretty good entry, I would say, for a pullback. Directional bias on it, there isn't really any advantage. So I would say if you get in here, you've got a lovely entry down here. If we make it down to there, we're massively extended on the 15. If you look at the hourly as well, we're just about to get extended on the RSI. We've got this nice double bottom here. So if that fails, that is a second entry at 150 ADR. You're going to be extended on RSI, ready for that pullback move. This is parabolic, obviously. It's come down very, very hard, very, very fast. So next M5 reversal alert on this is very, very tight as well. So you've got a good opportunity. Difficult to pick a spot really for it to pull back into, but quarter of an ADR to half an ADR as a pullback. If you got in there, that's 40. That's a quarter of an ADR. Half an ADR is going to be up in here somewhere. So, but you know, that's what it's doing, isn't it? Constantly at the moment. All we're doing is we're just pushing up, pushing down. This is the down push. So get in on the profit take and get out somewhere up here. Lots of targets to aim for. Just a case of picking one. If you want to use a fib extensions are good to use for targets as well. So 38 and 50 is where I would tend to look, somewhere around that area. So nice little scalp opportunity on that one today as well. Weeklies, we've got pound New Zealand. So we're on Wednesday. So anything that hits midweek is good. Unfortunately, it's already played out. So there we go. There's the 300 pip move to the upside. Weekly range on this is 300. It's done 308. You've missed it though. So it was basically the news that's caused the pullback. So we had a monthly as well, didn't we? Gold. Okay, gold has hit its monthly range. So average monthly range on gold is 1266. We're 1278. So that is the normal monthly range on gold already done. This is obviously on the US dollar strength that we're seeing coming through. So this is FOMC. This is unemployment rates. This is already tested, this propulsion gap. That, I believe, is going to be orphaned. Morning, Franco. So I reckon any kind of pullbacks on this are probably going to come back into this accumulation and maybe into that accumulation there. So if you want to take a reversal on this, obviously, hourly, we're extended. We've basically done ADR, or just about to do ADR. Haven't done it yet, but we're not far away. Just had a reversal alert on it. So yeah, I like this as a potential long for a pullback, but it's difficult when you've got so much news coming up. So this afternoon we've got retail sales at 1:30 on the US dollar. Then tomorrow at 1:30 we've got the PPI figures. So you've got two more. I'd say obviously yesterday we had the CPI figures, which were again bullish. So we've got two big news events coming through on the US dollar, which could potentially power it up. They could also weaken it. Yeah, so difficult. We're down at the 72 moving average, but I think obviously with most of these US pairs, we're pulling back on a new leg to the downside because the US dollar is now forecast not to go into recession. We've got some decent movement on the DAX just coming in. Someone just said. Yeah, DAX is off. We'll have to look at that in a sec. So yeah, now we've got all this positive news coming on the US. I think we're going to strengthen up. It's the world's currency. It's going to be and is slightly doing better than everybody else. So we will see. But it's going to be a bit dangerous, I think, to mean revert this. I'd much rather be getting on short on this. It's very difficult to pick a place to get short on it, though. So, but I don't trade gold because gold hurts me every time I trade it. So, we just had some news come in. Von der Leyen is speaking at the moment. Von der Leyen is proposing a 10th tranche of sanctions against Russia. Recent data on euro. Sorry, I should flick over. I keep forgetting you can't see it. Recent data on the euro inflation is encouraging. Upward effects of energy and food commodity prices still be significant. Lower gas prices eventually trigger a reverse transmission on inflation. So basically slightly bullish again on the euro. So DAX, nice little spike out the highs there. I'm break even on this position now, so it's a no lose trade. And again, this trailer here is trailing 100% of that range. So the trailer on, and this is why I've put this extra feature into the opening range breakout. The trailer on that one, on the pre-market, I want to be as tight as the pre-market range. So this is a fast mover, so I want the trailer tight. On the 15-minute opening range, the trailer is a lot bigger because the opening range is a lot bigger. So this is trailing by 273, which is, should be that opening range. Is that the right trailer? Was it that one? No, it must be that one, yeah. All right, 270. Oh yeah, because the entry, yeah. So it's not kicking in, the trailer's not kicking in at the same time. So this new opening range breakout, opening range trailer feature just allows you to adjust it dynamically based on the ranges. So if you've got a really tight range, you're going to have a really large lot size if you're percentage risk entries, basically, as I am. So what you want to do is, if you've got a tight range, you're getting in with a large contract size. You want to tighten your trailer faster so that if that is a false breakout, you don't get lost, such a big loss. However, if you've got a massive range formed, you don't want a tight trailer on it. You want a looser trailer on it because it's likely the price action is going to be more fluid, more market structurally. So it just allows you to be a little bit more dynamic. The other advantage of this as well, this feature, is, so yeah, I'm using 100% of the opening range as my trailer, is this will give you a much better, when you're back testing, it will give you a much better or much more accurate result to your back testing. Reason being is, if you look at the ranges on the indices, so cancel. If I show you the S&P, for example, on the daily, yeah. So you see the size of the candles. The ADR at the moment on the S&P is 72, right? So you see the size of these candles in the bear market. We've got these huge candles going in, fairly decent sizes, right? If we go back to the previous bull market and look at the candle sizes, yeah, look at these candles here, 25, 30, 34. There's a big one there, 49. Our average at the moment is 72. The average is back here in this bull market. You're going to be looking at somewhere in the region of 20 to 30. So obviously the opening ranges in these opening range breakouts in these market conditions are going to be much smaller. So your lot sizing will also be much larger. So what this new setting allows us to do is backtest our trailing stop losses based on the kind of ADR at the time, if you like. So what was the range at the time? So at the moment, we're seeing ranges of pre-market range here, for example, of 20. The pre-market range back then might have been 9, because obviously the ranges are much smaller. So your lot size will be much bigger, and the speed of which things move is a lot slower. So being able to trail based on that, I think, is going to give a much better indication of this working in different market conditions. Because what we're seeing in this bear market is huge volatility, huge candles. If you go back and back test this on that bull market in 2020, you're going to see a completely different result. Because if you're using a 300-point trailer here, you're probably only going to get 300 points in a day. There's no point in having a 300-point trailer if the average daily range is 300 points. Yeah, our average daily range at the moment is 700. So I think it will give us, I haven't done any back testing with it yet, but that's one of the reasons I wanted to introduce it, was so that I could use the trailing stops as a percentage and get a better understanding of how it will work in different market conditions. Because at the moment, what you will need to do is you will need to adjust all of these pip stops, targets, and everything, because the ranges are going to be different in different periods of time. Yeah, so in here we're tiny candles. In here we're huge volatility candles. Yeah, bear markets are always bigger and more volatile than bull markets. So it will help to get an understanding of how well the opening range breaks work during that period. So I'm going to test 2021 with it and see what difference it makes. So DAX is nice breakout there. If you're on the pre-market, anybody still on the pre-market? I got stopped out by, again, it's not my day. I got stopped out by 2 points, basically. Otherwise, I'd be very nicely in on that. Still hasn't hit my TP, which would be up there. But if you're still on the pre-market, well done. Big Papa, hi, I'm new here. Are all what you are talking about now can be learned in your YouTube videos? Yes. So on the website or on YouTube, just do the bootcamp, basically. It's all on the website as well. So if you want to go to the website, go up to Trading Education, Position Trading Bootcamp. There's the 5-day bootcamp there. All the videos on YouTube are on the website, but on the website they're a little bit better ordered. I just find it easier to navigate on the website. So all the indicator videos are there, and all the other videos are in this section here. So it's just a little bit easier than trying to find your way, because basically most of my YouTube channel is taken up with live rooms. There's 2 years of live rooms, or however many years. And then there's a few educational videos dotted around in between them. Right, so 24. So there's your ADRs today. Aussie dollar Swiss and pound odd potentially not too bad. RSIs, there's no 4-hour RSIs. We've only got hourly RSIs. Franco, sounds like you're feeling better. I am feeling a bit better, yeah. I just said before you came on, my doctor's up the drugs. And I actually had a good night's sleep last night for the first time in a week. Still in pain, but better. I've got another appointment with the doctor on Friday. And hopefully he's going to, well, hopefully it'll be on top of the pain by then. If not, then he's going to give me something else, which sounds like fun. That will really space me out. So I might have to take a week off. So yeah, RSIs, there's nothing on the 4-hour RSI extensions at all at the moment. There's nothing close at the moment. Euro yen's not too far away on the 4-hour. That was extended yesterday. Just about to get an alert, actually very close on the pound yen as well. The yen pairs basically, oh, that's already mean reverted anyway, so you've missed that. Yeah, these have just come out of mean reversion. So the pound yen yesterday, the entry was on this one yesterday up here. So your entry would have been there yesterday on that one. But yeah, there's nothing else there. So hourly RSI extensions. That's interesting. Look. Pound yen. So there's that area we identified as the resistance. It's exactly where we're going from. Again, look at that nice M pattern reversal on the hourly. So there's your reversal alert. There's your retest. Back down towards these lows. And possibly beyond. So looking at these all in order, Aussie dollar CAD. I really should get my scorecard up. Where can I put my scorecard? I suppose actually I can move these around now, can't I? Yeah. So I'm just, because I've changed the way that this works. I should be able to move my MT4 without it screwing up. Yeah, I can. That's good. Okay. I'll leave it there for a minute. Right. So I'm just readjusting, just doing a bit of maintenance in the background. So yeah, Aussie dollar CAD, hourly RSI extension. You've just had the M5 reversal alert on this one. So there's your reversal alert. Literally just had it right now. Almost an ADR hit as well. So hourly RSI extended. Again, same thing. Nice parabolic move to the downside. RSI extension, reversal alert, pullback. Rinse and repeat. There's your target. We're going to come back up. Same as that. We're going to come back up. We're going to retest the propulsion gap in all likelihood. So your target on that is kind of, I still can't see. The trouble with these tablets is they give you blurry vision. 90, I can't read it. 92,854, I think. Anyway, you can see the propulsion gap. It's there. There's your target. So Aussie dollar CAD is range bound bias. There's no COT advantage on it at the moment at all. Fundamentals are mixed. Retail sentiment is saying that we should be shorting it because most of the retail crowd are long on this one. So there is potential for it to come back down and take that liquidity as well. So we may get an extension down before it pushes back up. So if you're going to take this reversal alert here, be prepared to take a second down here and push back up into there at some point. So that looks pretty good. Aussie dollar, US dollar. That is a massive sell, Aussie US. So this I would not be looking to mean revert today. It's in a very similar situation, but we've got news on the US dollar. So it's up to you what you do when you've got news out, obviously. So a lot of people don't like trading around news. I don't really understand that myself because news is what moves the market. What do we need to make money? The market moving. So if it's going to move massively, I want to be on it, not trading around it. So obviously you want to try and be on the right side of it. So with the US dollar, we've had lots and lots and lots of positive news. We would expect the figures that come out today to be positive as well, hopefully, which means that obviously this is going to come down. So you haven't had the reverse alert on this yet, not quite hit ADR. Levels on this one, basically, we've got a couple of levels to look at. That one there and this one here, somewhere around, basically. So, you know, this is a zone as well. This, whoops. Yeah. So somewhere in here is basically a support area, which is exactly where we are now. That is your support from last week. So that's last week's low. So we're extended on the hourly RSI. Obviously, you can see FOMC, unemployment, potentially today, retail. Yeah, so we could get another push down. We've already come back and we've retested this. They've added to their positions twice at that level. So we know the market is on board south. Yeah. So this has been a massive sell on the report for ages. Yeah. So Aussie dollar, US dollar, obviously the massive sell. Can you see my pen drawing on the screen? I'm just watching the stream and I can't actually see my pen drawing on the screen. I am drawing all over stuff. It's not actually doing it, is it? Or is it? You can't see it? No. Let me just flick to MT4. You can't see my pen on MT4 either. Oh, this is annoying because I keep drawing stuff all over the screen and no one's seeing it. What's going on there? Okay, I'm going to have to have a play with this afternoon and figure it out. Okay. Yeah, so nothing I'm saying is making any sense, is it? Because I'm pointing to stuff. You can see my cursor, can you? You can't even see my cursor on the screen, can you? Hold on a minute. Additional settings. Capture cursor. Can you see the cursor? On the screen, I'm hovering on the screen over kind of the reversal alert at the moment. You can see the screen. You can see the cursor, yeah? Okay. But you can't see the pen drawing. You can see, right, sorry. You can see the cursor, right, but not the pen, right. Okay. I need to, basically all I've done with this streaming software is since I had that monitor go off on me, I've set it up, but instead of setting up and drawing an area on the monitor I want to capture, I've told it to capture a screen, a window. So what it's doing is it's capturing the MT4 window and it's capturing the browser window rather than an area on the screen. So I don't think the drawing tools work on this for some reason. I'll have to look into this anyway, but I'll look into it later this afternoon. So yeah, anyway, obviously watch my cursor. Aussie dollar, US dollar. So yeah, nice looking reverse alert from there and potential down there, but you are trading ahead of news. Just be careful with this one ahead of the news if you're going to take it as a mean reversion. You're about to get the M5 reversal alert on it. But if that news comes out positive, obviously we're going to see that moving down. So you need to be a bit careful with that one. Euro odd. So that's an RSI extension to the upside. Oh, wrong one. So again, nice big parabolic move. Potential for a nice drop on this one. This area here, the propulsion gap at 150 ADR is exactly where I would want to get in on this one. So that support there. Basically, we slammed straight through that. We haven't tested that yet, but that's just under 150. So if this can push up a little bit more today, up into that sort of 150 ADR area, that's where I'd be really interested in taking a reverse alert on this one. It's not far off it now. We're at 125 ADR. So this looks like a good potential reversal. However, obviously, the euro is strong at the moment, or it's anticipated to get strong at the moment. We've got Lagarde speaking later. So there is possibility we might get some euro strength. Obviously, Lagarde could come out and be bearish and obviously get some weakness on the euro as well. But it is stalling up here. So, yeah, potential for this one to drop, I think, from where we are up there. But as a pullback, so you want to be looking at these areas of support resistance down here. You know, sort of looking at this sort of area down here, really, I would say. That's probably the strongest area. That's a hit multiple times. So it's a nice little pullback there, sort of 70 pips. So roughly half an ADR, potentially back down to there. Euro odd, that's that one done. Euro New Zealand, very much the same sort of thing on Euro New Zealand. So if you're going to take one or the other of these, I would probably say Euro New Zealand is the better of the two. They're both sort of range bound at the moment from a fundamental perspective. But the New Zealand dollar, I think, is slightly stronger than the Aussie at the moment, ever so slightly. So it's got a little bit more chance of pushing back. But with both of these at the moment, the chances of you getting a strong move back down are quite high. So because we were expecting the euro to power up. So when that does happen, we should get a very decent move to the downside on this. We're tapping straight into that propulsion gap, although it didn't break that low that you can't see me drawing on the screen. But yeah, this propulsion gap up here with that low there, you can't. That's potentially where we're going to see some sellers start to sort of come in. But a lot of the sellers from that move will already be out now. So I like this as a potential short from an RSI extension as well. But again, with any of these ADRs against the euro, you've got to be a bit careful with these because they might fly the euro, and if it does, you're going to be in trouble with them. But just don't get greedy. Take a quarter of an ADR, quick scalp, that sort of thing. With these sorts of positions, when you get that reversal up, because it's been so orderly on the way up, there's no real easy targets to aim for. You've got this one here, sort of 1.7 area, maybe. So pushing down into there, take it. Quick scalp. ADR hits are always sort of scalps. RSI extensions are usually, when you get an ADR, you've usually got an RSI extension as well, obviously, because it's been pushing up hard. So Euro New Zealand and Euro odd, I'd take one or the other, not both as well, because they're both pretty similar. New Zealand dollar CAD and New Zealand dollar US dollar, again, these are fairly similar as well. So New Zealand dollar CAD and New Zealand dollar US dollar, basically, so that's a news whipsaw look. With both of these, they're at nice levels, but the thing you've got to worry about with these is the US dollar news, obviously. So the Canadian dollar will get dragged along with the US dollar. DAX is just stalling out at the highs at the moment. Anybody that's in the DAX long. So we've got multiple wicks to the upside. We've run out of buyers, basically. I've got a break-even stop on this at the moment, so I'm just going to let that do its thing. It's either going to have a small pullback potentially into this wick. There's a propulsion gap here, but you can't see it because I haven't got the indicator on the chart. So hopefully we'll find some buyers stepping in here, and it won't get to my stop. If it does get to my stop, fine. There's very little volume today, so I'm not expecting a massive move, but it could well be a trend day. We might have one of those days where there's just no sellers in the market, and we just have one of those nice orderly trends all day, in which case then, yeah, just take me with you. New Zealand dollar CAD, yeah, I like it from a technical perspective. However, from a fundamental perspective, the Canadian dollar follows the US dollar. If the US dollar powers up on the news this afternoon, the Canadian dollar will probably power up as well, meaning that both of these will get a drop down. So if we look at the New Zealand's US as well, you can see we're in a similar sort of position technically. We've got very good support levels, which we're bouncing off at the moment. However, it's news. So we know that obviously when the news comes out later on, at 1:30 when it's retail, if they come out as positive figures, we're likely to get a push on the US dollar, which means that this will be coming down further. However, that means we're going to get even more extended. So you'll be extended by then on the 4 hour. So this will have come down into here, and then we'll be waiting for a pullback on that move as well. So if we get positive news from the US, this area here, which has got multiple hits on it, is where I'd be looking to go. So 150 ADR. So either we're going to get a bounce from here that you'll be able to get out on, or you're going to need to get in at 150 ADR and get out on the second bounce. Yeah. And for the New Zealand dollar CAD, similar sort of story. So if we go out to the 4 hour, no, that's not New Zealand dollar CAD. Pulled the wrong one. New Zealand dollar CAD, we've got this level here, and then it's probably not as decently. That's not such a good support resistance area, that one. This area here is what I would look at. So it's this wick here, that wick there. That's forming your kind of support area, which is 175 ADR. So New Zealand dollar CAD, there's a bit more of a drop before you're going to find any real support. There is potential that you might get support off of this level here. Actually, that isn't bad because that's actually been tested already. So that has actually been tested. That's before ADR though. So, you know, I'm not really interested in taking this ahead of the news, but you've just had the reverse alert. It could well pull back up into here. So, you know, if you get half an ADR out of it, fantastic. If you don't get half an ADR out of it, there's potential for this just to go sideways ahead of the news, and you're going to be stuck in it. And if the news comes out negative, positive US, you're just going to go into drawdown on it. So not particularly excited by these at the moment. So that's it from those that perspective. Looking at the intraday retail sentiment today, top buys and sells. There's nothing really good from a sell perspective. From a buy perspective, oops. Only thing we've got is euro odd and euro yen. So you should be buying those two this morning, but you've missed them. Sorry, no, you haven't. Euro odd you've missed, haven't you? Where's euro odd gone? Sorry, I'm on the wrong thing. Euro odd. Wake up. Yeah, euro odd. So euro odd, you should have been buying that this morning. Huge buy. That's gone. And euro, what was the other one? Euro yen. Already gone. So you've missed them. Oil. Yesterday, basically, we had a huge whipsaw on oil. Oil is very, very difficult at the minute. Very, very, very difficult. Can't quite figure out what this thing wants to do at the moment. So we got this support area that I was looking to buy out of, which has worked absolutely beautifully. I missed the entry this week on it. I wanted a pullback into here, and it only went to there, so I missed it. So that area there is where I wanted to get in, this propulsion gap, and it didn't quite get there, and I missed that entry long. It's pulled straight up into that propulsion gap up here, there, and now it's coming back down again. So I still like it long. Trying to find somewhere to get in on this at the moment is like a needle in a haystack. There's so many levels all over the place that you could pick, but we got yesterday's low is an obvious area. If we come back down and test that low from the news yesterday, that could be a good spot to get in. We've got this low here from last week, from last Thursday, which potentially is good. And this area from the previous Tuesday, that is the area that I was looking at to get in. So if we get an ADR hit to the downside on oil today, I probably would want to take a long on this. So it's looking good. But we've got to challenge these highs at some point. So it's just a case of trying to find an area to get in really on oil, which is at the moment very tricky. So reversal alerts, probably M15 when you get one, or M5. You just might get them too quick on M5. But at the moment we're stuck within this huge spike anyway, so there's not really any structure changes going to happen until we get out the lows of this yesterday. So, but yeah, like that as a long. Just waiting for a decent setup. Say this is the area I want to be in ADR today, ideally. Franco, got everything running decent. Pound US dollar, disappointing so far. Pound US dollar doing well, unless you're long in it, obviously. If you're long in it, then yeah, it will be disappointing. Should be short in it, I think. World oil supply looks set to exceed demand throughout the first. Oh, here we go. Just had some news on oil. So IEA, world oil supply, looks set to exceed demand through the first half of 2023. Supply-demand balance could quickly shift to deficit as demand recovers. Some Russian output shut in, whatever that means. So obviously, if supply is greater than demand, prices will come down. Oil output set to rise 1.2 million barrels per day in 2023, driven by non-OPEC producers. So that's probably having an effect on oil. Bit of a whipsaw, not a lot. So with that news, we may get a drop today. And if we can get an ADR hit on it, that's probably where I'd like to start buying it up and start scaling into a position. This low, I think, was pretty safe. We've tested this low now multiple times, yeah. So this area got drawn in blue. In fact, we could extend this now down to there, really. But this whole area is roughly an ADR. So the that's 392, and it's 273 ADR. So it's actually 150 ADR, 150 ADR. So that whole area down there should act as a nice buffer zone. Now, I think we've found the low down here for oil. 70 to 75 a barrel seems to be the point that they're not interested in going below. DAX is just rallying again, by the way, if you're long DAX. So scaling in anywhere around here, this ADR today, you've got basically roughly 3/4 of an ADR move to the top of that zone, and then obviously 1.5 ADR down to the bottom of it. So if you scale into a position here, by the time you get to the bottom of this zone, if it ever made it to the bottom of that zone, you'd only really be in sort of 4 positions, and then waiting for that push back out of that zone. But yeah, it might not even get there. It might just go from here. Don't know. We've got it's Wednesday as well. Don't forget. So we've got crude oil inventories at 3:30 this afternoon. So Franco, you're short. Maybe too early. Yeah, I mean, give. Don't forget this afternoon we got news. So pound US is coming down nicely. If we get decent news this afternoon on the US dollar, obviously that will come down faster. So it looks pretty good. Right, that's all I've got for you this morning. DAX, I'm still long. How's the ORBs doing today on the DAX? Not bad. So I've got 3 different set files running on the opening range breakout. One's $450 in profit. The other is $1,114 in profit. And the other one is $306 in profit. But it has made a $600 loss this morning. That's the... which one was that? I can't remember which one it was. I'm losing track. I've got so many EAs running on my VPSs at the moment. Losing track of what everything's doing. But yeah, so nice moves on the DAX. Locked in a bit more profit on that now. So I'm locked in to 30. Well, only $30. Not a lot. Yeah, so 350 pip is the trailer look there. So that's 351 is the trailer, and the opening range is 351. The reason that when I looked at that stop previously, it wasn't right was because I've asked it to put a break-even stop on at 20 points. So it moved my stop basically to break even with an offset. Yeah, triggering break even at 200 with an offset. Can you see this window? Right, I'm at the moment. I've got the opening range breakout EA settings window. Can you see this? Because I can't see it on the monitor. You see two windows. Yeah, but can you see the input, the EA input window? Yeah. The settings window. Yeah, you can. Good. Okay. It's not showing on my my monitor for some reason. I don't know why. Very weird. Anyway, I'm going to try and play around with this today so that I've got it back to how it was before my monitor screwed it up. Right, so if you're on the ORB today, good luck. Hopefully that will continue to move. Target-wise today on the DAX, just be aware of where you're possibly heading. Oh, we've done potentially the gap fill already. So we're sitting up here at the moment. Gap fill is complete pretty much. So we might get a pullback from here. But 115 480 level roughly is next resistance up here. And then obviously yesterday's high is miles away, and obviously it's up by ADR. So if we're going to get a nice trend day today on the DAX, you'd be looking at 15,480 roughly, 15,478 as being your next resistance. So if you want to take some off there, that'd be good. Other than that, we've got a run up to yesterday's high, which is 15,530 all the way up here. So up near ADR. So plenty of upside potential on this, nothing really to get in the way. So if we can break that level, we could have a really nice runner on our hands today. It's just such a shame it stopped me out on that. That was such a shame. This would be a good 2-3K trade by now. Unfortunate, but I'm trailing. Off topic, Seymour, have you ever done anything with Renko? Yeah, loads of stuff with Renko. I used to trade a lot of Renko stuff. Market reversal alerts EA indicator works really well on Renko charts. I think the problem with Renko is people try to use Renko. I haven't got a Renko. I don't think I've got a Renko in here. No. The problem with Renko charts is people try to use them. All the strategies with Renko. Let me just get a Renko chart up. Whoops. So the problem with Renko charts is the way people always try to make money using Renko is when you get these trending periods. Yeah. So you basically get in when you get a Renko change, and then you ride that trend. And in theory, that looks absolutely brilliant. You put your stop loss underneath the low of the previous brick. Hindsight trading with Renko looks absolutely amazing. What happens, unfortunately, with Renko a lot of the time is these areas here will absolutely destroy you. And you can't tell. If you look at the hard right edge here, yeah, that's a long. So you get in long now here with a stop below that low. You can't tell if that's going to go into one of these lovely trends or whether it's going to go sideways. So it's not much different to anything else. So yeah, Renko, I think it's great. I call it the beginners. You know, it's baby block. It's like this is Duplo. These are Duplo candlesticks. You progress onto Lego, then you progress onto Meccano. Yeah, this is Duplo blocks. This is kids trading. A lot of people are attracted to it because of its simplicity. But in reality, trying to trade Renko it all looks really good on paper, but when you actually trade it, never actually made any money out of it. Yeah, plotting support resistance would be good, but yeah, I mean, if you like it, trade it. Not for me though. I've been through everything. Then literally, you name an indicator or anything. I've done it. I've done everything. I've been around so long. I've seen everything, and I know all the pitfalls of everything. And nothing's really bad. I don't, nothing's really bad. There's nothing wrong with Renko. It's very simplistic. But there's lots of chart patterns in Renko, like 2-bar, like M and W patterns. Here, it's a beautiful M pattern reversal there. Yeah, market reversal alert in there. There's an M pattern reversal. Yeah, there's a W pattern reversal. So it draws out market structure really nice and clean. How many percent did I make yesterday? I have no idea. Not sure. But yeah, the trouble with Renko as well, and this is the main, I think, pitfall with Renko, is you can fine tune it to look amazing, but what you're doing is you're actually fine tuning historical information to build a system on. And because these Renko bricks are printed when prices moved a certain distance, you designate what that distance is. So the first problem with Renko is you have to fine tune it for every instrument. So Renko setting on pound US dollar will not work on Aussie New Zealand or Euro pound, for example, because it will draw completely differently. So when I was using Renko, I was investigating it on the futures market a lot. And you need completely different settings for Renko on the S&P 500 to the NASDAQ. So what you're doing is you're curve fitting an indicator to fit an instrument. As soon as you start curve fitting, you've immediately put yourself at a disadvantage because you're lying to yourself. Because all you're doing is you're making it look good in the past. It's got nothing to do with how it's going to look in the future. So because you can adjust it, it causes problems. There's no time involved in it, only levels, which is its main advantage. So what we're looking at here with this one, I don't know how many blocks there are in there, but that could be 2 hours. It could also be 2 weeks. And that's what I think the problem is with it. It's too configurable and it's too curve fittable. It's like you're making the chart look good for what you want to do with it, but when you put it, I mean, this one up here on the Investopedia, this looks like a beauty, doesn't it? M pattern reversal. Yeah, shorting opportunity after a short-term pullback. No one would have taken that. It's just, I don't know, it just doesn't work. I found it just doesn't work. But it looks good. There's a guy selling a course on it who comes up on YouTube every now and again. Some Renko mastery course or whatever. And I got hold of a copy of it. And it was part of the course was go onto every instrument and fine tune your settings for Renko for each of the instruments that you trade. So lie to myself about what make it look good on that chart. Okay, I'll make it look good on that chart. But it's like fine tuning the RSI. Yeah, if you go into, if you come over here and fine tune the RSI, I can make the RSI look amazing. If I go to the 4-hour chart, I can fine tune this thing so that it will give me signals which are 100% accurate. So if I go to, I don't know, let's go to 35. Yeah. That 35 is not a good setting. So let's change it to someone else. Let's go 42. That's a bit smoother. So I'm just looking to try and get it fine tuned so that I get that spot on, and I'll be like, wow, 42 looks amazing. But you know, all I've done is I've adjusted this to match what happened in the past. That's got nothing to do with what's happening next. So the next time that gets to 42, it could just sit up there for ages. I don't know what's going to happen in the future. And this is the problem with indicators where you've got too many settings in. You can fine tune them to look amazing. This is as close to default as you can get. But the only reason I know this works is because I've been trading with it for years and I know it works in the future. I just couldn't get that with Renko for some reason because I changed it too much. It looks amazing on the strategy tester, shows amazing results. Yeah. The other thing about Renko as well, Seymour, as you've just said there, running it to make sure it's not repainting. All of the MT4 indicators that do Renko repaint, every single one of them. Yeah, they all repaint. Right, the thing you've got to think about Renko is a calculation based from a point to a point in price. Where you start that calculation will determine whether or not that brick is red or green in the first place. Yeah. So if you say I want to use 100 pips as a measurement, for example, for each brick, where does it start that calculation from? What point in time back here is it starting from? Because if you start it from a different point in time, every brick after it will have a different color. Yeah, and all the charts in MT4, all the Renko indicators in MT4 create offline charts, and none of them say I want to start it from here. So this is what I mean. What you have to do then is fine tune Renko to make it look right, but all you're doing is you're lying to yourself. I've got really good Renko charts in Jigsaw Trader, and that Ninja Trader does Renko as well. But I don't know, it just didn't work. You know, as good as it looks on paper when they show you these charts, when you actually try and trade it, every time you get a red brick, you go short, and it immediately gives you a green brick and stops you out. And you're like, well, okay, that didn't work. So you try it again, and then the same thing happens again. And you're like, well, why is it suddenly not working? And I don't know, it just didn't work. But I don't know, maybe I didn't look into it long enough. I probably looked at it for about 3 months or so. Tried to trade it. I just couldn't get a decent strategy out of it. But doesn't mean there isn't one. You know, and the other thing you've got to bear in mind when you're looking at strategy development on your trading journey is you will learn things as you go. And depending on what you've learned before will depend on whether or not that thing has an advantage or disadvantage to you. So with Renko, for example, if we're drawing loads of blocks on the chart, yeah, if you knew about support and resistance and liquidity areas before you did Renko, you would look at it and go, oh, look, there's a support and there was a liquidity run. So that green one, that green block there, has more weight than that green block there because this one is after a liquidity run at support. If you didn't know what support and resistance and liquidity runs were by the time you came to your Renko, finding out and discovering about Renko, you will have a completely different view on how to use this because what you've learned up to the point that you discover something will have a bearing on how you interpret and use that thing that you discover. So moving averages is the first thing that everybody gets introduced to in trading. Price action usually and moving averages and moving average crossovers. So everybody starts on moving average crossovers and they learn that moving averages show you which way price has been in the past. If you had discovered Renko first and then you discovered moving averages after, you would see moving averages in a different way. because your learning would be skewed by what you've got in there. And it's very difficult to untrain your brain, which is the problem everybody has with the position trading bootcamp. Not using a stop loss, don't be ridiculous. Every course I've ever done in my life has told me to use a stop loss. It must be wrong. That's why it works, because every course you've done in the past has not worked. That's why you're here. So I when I was learning Renko, was fairly late on. I discovered Renko, so I think I threw it out the window, because everything else I'd found so far, all Renko I think was doing was confirming what I already knew. So there was nothing new in it for me, if you see what I mean. But it doesn't mean it's not going to be good for everybody else. Go and learn it. You have to try everything. I strongly believe in this. You've got to do everything, try everything, experiment with everything to know what fits with you. What works for me is RSI and market structure. That doesn't work for a lot of people, but if you take part of it away and make your own thing with it, that's what it's all about. So take market structure, M patterns and W patterns, and you spot those on Renko very easily. So it's a simplified way of M and Ws. But then I would argue, if you're going to do that, why not just change to a line chart? Yeah, because that's really easy to spot M and W patterns as well. There's a W pattern there. Really easy on a line chart. I don't need a Renko chart to show me M's and W's, because I've got a line chart built into MT4 which does the same thing. But anyway, Franco, Heikinashi is good for me after entry, just to monitor trend strength. Yeah, Heikinashi is good. Heikinashi is a hybrid of kind of Renko and candlesticks. Again, I tried to use Heikinashi. Everything you learn looks amazing because it's new. In reality, everything just shows you the same thing in a different way. And it's understanding the mechanics behind the market, why it works and how it works. Then you realize that actually I don't need all these fancy things, because I just need to wait for the market to do the thing the market will do. I just can't, and every indicator and every, Renko make market structure clearer if you need it to be made clearer. Heikinashi will help you stay in a trend longer, because the candle color will change less if you need it to. But at the end of the day, it's the market that changes the direction, and there's no indicator in the world that can tell you whether that is going to be right or wrong. The market reverse alerts indicator is great at identify when there's a structure shift, but it's wrong a lot of the time. It's just, this is why you can't take every entry. You need to think, right, why is this a good entry? Because we are at the end of a sell cycle. That's why that one's a good entry. That one there is potentially a good entry as well, because we're at the end of a double buy cycle. But then again, the market reverse alert that happened here looked like a good entry as well. I mean, he did get a good trade out of it, but it's understanding, the RSI is extended, I need to go short. No, you need to understand why the RSI is extended. You need to understand the why behind this, not the fact that it is. Why is this pointing up? Why are these moving averages pointing up? Because price is moving up. Yeah. You need to know why things are doing things, and that's obvious, isn't it? Moving average, you take these moving averages off the screen now, I can tell you it's in an uptrend. Why? Because price is going up. Everybody, I constantly get people saying to me, have you tried currency strength meters? Yeah, but what does that tell me? Currency strength meter tells me something has gone, is strong or weak. I know that. If the candle's green, it's strong. If the candle's red, it's weak. I don't need a currency strength meter to tell me that. The candlesticks show the same thing. Again, indicators all showing the same information in a different way just confuses everybody. And then you just end up with paralysis by analysis, and you can't take any trades. Simplify everything. And Renko is the simplest thing out there. Super simple. But for some reason, I didn't make it. Maybe I should look at it again. Maybe, I don't know. I really like. I love the simplicity of it. But yeah. So each brick is 35 points on this particular chart. So if you change that to 45 points, you get a completely different chart. Which one's the best? Who says it's the best? Why is it the best? Yeah. If you think about it, if adjusting this from 35 to 45 gives you a completely different chart, what should you be adjusting it to? Probably ADR. So what you need is a Renko brick that changes dynamically based on the average daily range of the last 10 days. Then you would find that's much more accurate. But then I think you'll probably find it's just as good as candlesticks. I don't know. Maybe that's something to look at. Yeah, I mean, it filters out all the chop, basically. But I see missed opportunities here. I see things here that I would have got into that you would not have got into with a Renko. So Renko on this one would have got you in on that candle there, on that brick. I'd have got in down here somewhere because I would have seen an RSI extension. So I'd have got in way before that brick turned. I'll tell you the other thing that really got me with Renko was getting out. When you get into one of these moves, you get out on the first red closed brick the other way. The problem is when that brick closes red, it's actually, let's say these are 35 pip bricks. That's 70 pips it's moved against you, right? You only get in here, right? So you're actually only making one brick on a 5 brick move to the upside. You actually only make one brick because you're having to wait for the brick to turn green to get in. So there's 2 bricks since the move started. And then it's 2 bricks since the move ended that you get out. So you make the 1 brick in the middle on a 5 brick move. That's the thing that got me as well. But anyway, yeah, I don't know. Each for their own. If you think it's useful, use it. If you don't think it's useful, don't. I'm out of my long. So basically the EA has closed me out at end of the session. So I'm out of that one. Nice little long. Franco, these methods still require basic understanding of trading skills, logic, or you get killed. Yeah. 501 jeans look good on me, maybe not on you. The old Levi 501s, they still going? Seymour, I want to show you my script, but don't know you. Well, it doesn't hurt to show me your script, is it? Why is it? Is it something you're looking to sell? If you get, I mean, I'm 99.9% sure whatever you're going to show me, I've seen it. Trust me, I've been around in this industry for 15 years. Every time there's something new comes out, I've seen it because there's nothing new. ICT did an interview the other day with somebody on YouTube. He doesn't do interviews. I think it was his first ever interview because he's been hiding behind his voice for however long. Well, not hiding behind his voice, but just not, he doesn't do interviews and stuff. But he did an interview basically. And he admitted in the interview, a lot of his stuff comes from Larry Williams and from other places. Like I've been saying for ever in here, there's nothing new. Nothing I do is new. It's all market structure is not something I came up with. Support and resistance, supply and demand is not something I came up with. The opening range breakout strategy was taught to me 10 years ago by a stock trader. It's nothing new. Nothing's new. Everything ICT does is somebody else's stuff rejigged into a new way of thinking. And it's exactly what my stuff is. So when people come to me with strategies that are new and groundbreaking, like someone sent me that one about this trader who's come up with this 1 hour into the session, blah, blah, blah. That's Larry Williams's work from 25 years ago. He's just changed it from 1.5 hours to 1 hour. It's nothing new. I will have seen whatever it is before. I'm pretty sure. If it's based on Renko, I've said it, obviously, but whatever it is, the key to whether or not it's profitable is backtesting. Backtest it. If it backtests and it comes out with an edge, use it. If it doesn't come out with an edge, don't use it. And if you need help building something to backtest it, I can do that. But I'm, you know, if somebody shows me a strategy and says, this is the strategy, I can immediately look at a strategy and go, well, that's not going to work because of this. So I'm quite useful in that respect, because, you know, some people come, I've had somebody send me a strategy which is based on the ADX and MACD. Immediately I turned around and said, well, that's the same indicator. You've got two condition indicators there. There's no signal. Oh, I just know all this stuff because I've tested it all. So I'm useful in that respect. But don't take it the wrong way. No, if I say it's crap, it doesn't mean it's crap. It's just I found it crap. But that's me. Everybody looks at things in different ways. Mayo, the problem with Renko is that the blocks are not tied to time. That's not necessarily a problem. That can be an advantage because we condition ourselves to work on these candlesticks by time. The market doesn't actually work by time. The market works by support and resistance. Yeah. So the market is working this level here. Yeah. It's worked it 3 times. Whether it worked it on the Wednesday, Monday, and Tuesday, or the Wednesday, Friday, and Thursday is irrelevant. Time has nothing to do with price levels. Yeah. This level here, the market is currently working. Yeah. Here. It's nothing to do with time, right? If I show you this chart here on the hourly, you'll see that it's hit 1, 2 days, 3, 4 days. If I go up to the daily and look at the same level, yeah, on a daily chart, you can see that it's a previous hit back here. Hit, 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 hit. Yeah, but time has got nothing to do with it. The price level is why the market is reacting there, not because of time. So Renko eliminates this time thing that we attach to a candlestick chart. A candlestick is just a representation of price over time. If we change the candlestick time period, we change the structure, the market structure, the view, the number of entries, the effectiveness of indicators. We change everything when we press these buttons. But the market doesn't care about any of that. There is no professional trader in an institution looking at a candlestick chart. They don't even use candlestick charts. They don't know what they are. You go into an institution, you'll be taught to trade the ladder to start with. Candlesticks don't exist. They use area charts, line charts and area charts, because time has got nothing to do with anything. Why would you segregate price over a time period? Doesn't matter. There's no bank that says, right, we need to get the DAX up to 156.54 by lunchtime. If they're targeting 156.54, they will fight to get to 156.54 as long as it takes. So there is actually an advantage to Renko in that respect. You get a Renko chart, and that's the other thing found about Renko charts as well. You change a Renko chart to a different period, right? So for example, here, let's take this range, this section on the chart you see here. Yeah, from the high there to the low here is 320 pips, right? So if you set your Renko chart to 320 pips, it will only draw one block in that entire time period from here, which is the 1st of February, back to the 19th of January. So for 2 weeks, it will draw one block. Bizarre, isn't it? If you change it to 150, it would have drawn 1, 2, 3, 4, 5, 6 maybe blocks. And this is my point about Renko. Because you designate the distance in price that you want it to draw the blocks. You're manufacturing something that looks good on a chart. Yeah. Historically. The fact that this went sideways like that and you're trying to filter that out, it may never replicate that ever again. So what you're doing is you're curve fitting price into a block historically. So I mean, it just doesn't work going forward. If this thing, the ADR on this is 193 at the moment on the DAX, right? When we go into a bull market, the ADR on this is going to drop down to something like 70. If you've set your Renko blocks to 70, you're only going to get one block a day. Doesn't work. So you're going to have to readjust Renko when we go into a bull market. You're going to curve fit it again to that bull market. If we then enter into a bear market, your bull market signals are going to be completely out of whack. It just doesn't work. I say it just didn't work for me. But anyway, that's enough for Renko. Everybody's looking at the same thing, but can come up with different things. Just people looking at clouds. Everybody sees some different image. Exactly right. Yeah. Everybody sees something different on a chart, and that's why the market works. And that's like I keep saying, the important thing to understand is the market. Why the market works. Why is this thing going up at the moment? Because there's more buyers in the market than sellers. Because there's more people out there at the moment that see a value in the stocks on the DAX stock market where it is. So they're buying it. The reason these candlesticks have these big wicks at the top there is because when we got to that level, there were less people interested in buying it. So the sellers started to take control. Now, a lot of people will have shorted this. If they shorted it, they lost, right? But unless there is people seeing a different view of this, to me, I can't make money. Because if I want to go long on it, someone else has got to be selling it for me to actually enter into a transaction. There's only going to be one person comes out of that with the win, me or that bloke. So you have to have people seeing the same thing in a different way for the market to actually operate. And that's why it's all driven by sentiment. And that's why support and resistance works. The reason it's bounced at this level here 4 times now is because people in institutions with big money are seeing it happen, and it happens again because they go, right, this looks like a good place to buy because that's where we bought it last time and it works. They do it again. And because other people see them do it, they do it. And that's why we get these market cycles. And this is why the RSI works so well. After a relatively strong move in one direction, we know that the market is exhausted and the people that have been buying it will want to exit their positions to bank their cash. Therefore, price will come down because when they are buying it and they need to exit the market, they have to become a seller, which means the price has to come back down again. RSI tells us when the buyers are overloaded and they're likely to unload and become sellers. We just jump on board with the sellers. But you don't get in because of the RSI. You get in because of the knowledge that there are too many buyers on side. The RSI, you could use a stochastic, you could use a MACD, you could use an ADX, you could use any oscillator to tell you the same thing. You can fine tune it to give you the right sort of setting. But at the end of the day, you're not selling it because the RSI is extended. You're selling it because the market participation is too long. We know that the next thing that comes after buyers is sellers because we do the same thing. I bought here, right? What did I have to do to get out there? I had to sell my position. I became a seller. Everybody is a buyer and a seller in every single transaction they make in the market. That's the thing that you need to understand and learn, not candlesticks, indicators, all the other stuff. The indicators and the candlesticks help you to read everything, but you've got to understand what's going on under the hood. The reason this is going on up at the moment is because there's more buyers and sellers in the market. That's it. We need buyers on board and sellers on board, and that's why the indicators like the WRB, all this is showing me is where are they? Where are the buyers? They're sitting here. They're sitting here, and they're sitting here, and they're sitting here, right? Yeah. So the buyers came into the market. We came back down. They added to their positions. They added to their positions. They pushed up. They came back down. They added to their positions. They added to their positions. They pushed up. It came back down. They added to their position. Pushed up. Yeah. What's going on in the market is indicated by this. It's not bouncing because of this indicator. You need to understand every indicator you use on your chart. You must understand what it's telling you. That's the most important thing. And people say, should I take every arrow that's painted by the market reverse alerts indicator? What is the arrow? I don't know. Well, if you don't understand why the thing's drawing an arrow on your chart, why the hell would you press the sell button? Come on, people. But everybody's looking for that, aren't they? I want an arrow that tells me when to buy and sell. Why? How is that going to help you? A 2-year-old child can press a button when an arrow appears on a chart. Does that make them a good trader? No. Bizarre. But everybody goes through the same thing, don't they? We all do the same thing. It's life. It's trading. Seymour, backtesting has shown around 75% profitable with 3 or 4 times profit factor on the 5 and 15 minute. Yeah, there you go. But that's only a month testing period. Yeah, a month is totally irrelevant. Any strategy on 5 or 15 minute, minimum 6 to 12 months. Yeah, market conditions over the last month are completely different to the market conditions over December. This is why you have to backtest in multiple market conditions, right? So if you've got a strategy, does it work in a bull market? Yeah. Does it work in a bear market? Yeah. Does it work in a bear volatile market? And does it work in a bear calm market? Does it work with an ADR over 200? Does it work with an ADR under 100? You have to pick. The way to do this is to use ATR. So when you're testing any strategy, you use the ATR indicator to identify periods where we have volatile and non-volatile areas, right? So it's annoying because I haven't got you can't see me drawing on the screen, but I'll try and draw it with blocks, right? So if I'm back testing a strategy on the M5 or any time frame, if I'm back testing a strategy, I will pick multiple times to back test it. So I will test it here because we're in a massive bear volatile period. The volatility went through the roof. I need to make sure my strategy can survive in that. I will then move it and test it here over this very calm period of trading. Does it make profit in that period there? I will then test it again over this period. Yep, so we've got a period here of high volatility moving into low volatility. Yeah, so if you can test your strategy over these 3 periods and it comes out, it's robust. If it doesn't come out with a profit, it's not robust. It's curve fit to a particular market cycle. That in itself is not a problem because you just filter volatility out. So if your strategy works in nice calm markets, but every time we get a big run, i.e. a trend or something, it stops working, it's a mean reversion strategy and you can't use it in a trend. So you need something to filter out those trend trades. So testing it over the last month, which is, where are we? Something like that, yeah? You've tested it over, whoops. What the hell? What did I, what on earth did I just do there? Did I just shut that down? Don't know what I did there, but that just disappeared. But yeah, if you're testing over a very calm period, let's put it back on there. Yeah, where it's just doing that over a month. Yeah, look at what happened in December. We had a big rally all the way down from there, where the average true range of the instrument contracted dramatically. Did it work well in that period of time, as well as in the period of time where we just had low volatility all the time? You've got to test all of, this month is nothing, especially with Renko, because you've curve fitted it. If it uses Renko charts, you've curve fitted it to the last month. Of course it's going to look good. You've made it look good. If we suddenly go into a massive bull volatile market, you'll find it will collapse. The whole strategy will just fall apart, which is why you have to test, which is what's called out of sample testing. You've got to test data out of sample. So you develop a strategy over a period of time, and then you take that strategy and you test it over 2 different periods of time that it's never seen before. If it can produce similar results and in those areas where it's never seen the data, that is a robust strategy. And if you can't do that, and this is why I created that page on my website. That's the whole purpose of me building this page on the site, was to do this. Yeah. If you've got a strategy, you need to verify the edge of the strategy, the long-term edge. Yeah. Test it, robustness, test it, because everybody can find something that works over a period of 2 or 3 months. Does it work over the last 2 to 3 years? Are you only looking to become a trader and earn a living out of trading over a 2 to 3 month period? If so, fine. Go from now and you might be lucky. If you want to do this for the next 5 or 10 years, you need a strategy that has been back tested over a long period of time, has gone through booms, busts, bubbles, COVID, wars, everything. The Market Reversal Alerts EA H1M5 was live running on that signal that I've got running on MQL5 before the Ukraine war kicked off, during the Ukraine war, and it's still running now with over 100% return. It survived the war because it's based on market movement and the theory of buy and sell cycles. Buy and sell cycles will exist in the market forever because if they don't, banks can't make money. If banks can't make money, we don't have a market. So if you've got a strategy that's not based on market movement theories, then it's always going to struggle. But there's things like the S&P, S&P, I've got strategies that work on the S&P 500. Absolutely beautiful. They're buy-only strategies. They only buy. But they only work in bull markets. They don't work in bear markets. I know they don't work in bear markets because I've tested. So I don't run them in bear markets. I only run them in bull markets, which is why at the moment I'm so keen for us to get back into this bull market so that I can stick those back on again because they work absolutely beautifully. But they don't work in bear. And you only know that if you backtest over a period of X years. Got to be done. Franco, banker friends use fundamentals. Glanced at the 200 SMA sometimes. Yeah, exactly. Exactly. They don't use indicators. They don't use anything. They use fundamentals. Yeah, that's why I built the website out for the buyer scorecard. That's what the banks do. Do you think they're interested in all the 200 moving average has just crossed above the 400 moving average? We should buy, boys. What do you mean we should buy? You're trying to buy the Russian ruble. They've just invaded Ukraine. Everyone puts sanctions on. Yeah, but the 200's crossed the 400. Nothing to do with anything. Fundamentals drive the markets. That's it. Technicals help you analyze when to get in direction with the fundamentals. That's it. And indicators and EAs cannot read fundamentals. So every piece of backtesting you ever do with any strategy is totally irrelevant when the nuclear missile goes off from Russia and lands somewhere in America. Do you think that strategy is going to hold up? No. Fundamentals, earthquakes, Turkish lira, not looking so good now, is it? That's the thing you need to understand. It doesn't matter what indicators you use. It's all down to, as a trader, get in and get out after a cycle is finished, when the market is getting in and out. If the market is doing something weird because we've got some pandemic happening, you need to get in and out when the market's doing that. The market will panic and go wrong in times like that. You've got to identify that. The EA will just get slaughtered during COVID. And I've had people say, people email me or DM me and say, I've tested the Market Reversal Alerts EA during COVID. It blew the account. Really? It couldn't survive a pandemic that wiped the entire move off the stock market in 2 weeks that it's made in the last year? No, I don't think anything could survive that. So, banks went bankrupt. Brokers went bankrupt. Nothing you can do about it. It's not a fun job when things like that happen, unfortunately. I lost a lot of money in that. I lost a lot of money here when we started going into a bear market because I was preconditioned to be in a bull market for a year and a half. And I was like, what do you mean bear market? Forgotten how to do that. Let's go and look in the books and figure out how the hell we make money out of a bear market. Oh yeah, it's volatile. We need to trade momentum plays. And then as soon as this bear market's over, we need to go back to trend plays. You've got to adapt. You can't teach an EA to adapt. You can put an EA on that's designed to trade in a market condition, but you can't teach an EA to adapt to the market. That's what everyone's looking for, the holy grail. They can just stick on a chart and make it work, and it doesn't work that way, does it, unfortunately? We wish. What have I just done there? Oh, I've just closed out my... So I'm not with it. I just closed out my chart. Use that one instead. Right. Is it after 13 years then you cracked the code? No, not really. No, there is no code to crack. The code. Morning, Wissam. The code, as far as I'm concerned, is there isn't one. If you haven't done the bootcamp yet, have you? Go and watch the bootcamp, and I explain basically what I did. But coming to the realization that you have no control over this thing is what makes you suddenly become successful. Or not successful, just suddenly stop losing money. Because you realize that there's nothing you can do. Right? At the moment, you should be selling the DAX. Yeah. But you could also say you should be buying the DAX. So either that is going to continue now down because we've got 3 bear candles on a trot, we're in this propulsion gap that might break, or we're going to get a buy here. I have no control over what happens next. I have no knowledge or indicator that can tell me what is happening next. What I have is the ability to place a risk in the market and watch what the market does and then exit the market. So the only 3 things that I know are going to happen from this candle forward are the market is either going to go up, it's going to go down, and it's going to move through time over the next 5, 10, 15 minutes, hour, or however long I want to watch it for. Those are the 3 constants: up, down, and sideways. As soon as you stop trying to guess which one of those it's going to do and just accept you get in and you get out, sometimes you win, sometimes you lose, that's when all of a sudden it starts to work. Because you stop hunting and trying indicators. The reason everybody loses money is because they are trying to find the holy grail indicator or strategy or system that has a strike rate and a risk reward that works all the time. There isn't one. The opening range breakout EA has a fantastic long-term edge. It will lose for weeks on the trot. I know that because I've backtested it. I've seen it. It will have flat lines for weeks on the trot. It will have huge 5, 10 grand days. I've seen it. But I can't control when they're going to come. So I have to use it every day, get into the market with it every day, and accept that some days it's going to get chopped to bits and I'm going to lose money. Other days I'll be turning around like yesterday and made 4 grand. Yeah. I lost 2,500 the day before. That's just trading. And as soon as you accept the fact that when you press the button, there's 0 impact you have over what happens next, that's when all of a sudden the light bulb clicks on. Right. So if I'm going to get in, how shall I get in? Which of these 25 courses I've done shall I use? Because they all work sometimes, but when you stop looking for the strategy that works 75% of the time, because it doesn't, that's when you start to make money. The realization that what you're looking for doesn't exist, the hunt for the holy grail, that's when you start to make money. So I didn't crack a code. I realized there was nothing to crack. I already knew how to trade. I just wasn't doing it because I was trying to find something to do it better. What you do is you press the buy button and the sell button. Yeah. That's going up or down. I don't know which. If it goes up a bit, I'll get out and I'll make some money. If it goes down a bit, I'll get out and I'll lose some money. What my job is at the end of the day, the week, the month, the year, to get out more in wins than losses. But I have no control over where this is going now. I personally think it's probably going to go up because we're sitting in a propulsion gap and I'm seeing signs of an inside bar forming, which means that there's sellers potentially running out of steam. So I'll take a long. I have no idea. But what I will do is I will get out of it if it goes against me. But when it goes my way, I will get out of it with a little bit more than when it goes against me. That's my edge. My edge is just knowing the fact that I've got no control over this thing and it's going to go up or down. There's ways and means of getting in with a better edge, i.e. getting in when there is a resistance level in the past that we have surpassed and rejected. That's a good time to get in. Yesterday's high is a good time to get in. Average daily ranges are a good time to get in because we've usually run out of steam when we reach them. Propulsion gaps are good areas to get in because we know that there was buyers in this area previously, so they're good areas to get in. I have no clue whether or not when I get in, it's going to go up or down though. What I know is historically, I've seen happen over a number of times. Whether it's going to happen today, I've got no clue. You're talking like Mark Douglas. Well, that's the biggest compliment I've ever had. Mark Douglas is, his book is sitting on my desk right now, Trading in the Zone. Always sitting on my desk. But Mark, I read Mark Douglas, don't know how many years ago I read Trading in the Zone. And I've reread it every year since. And I think that is part of why I do what I do, because I read Mark Douglas's book a decade ago. Why did I not pay attention to it? Now I know he's absolutely right. But I still hunted for the Holy Grail for many years before I realized that that bloke in that book was right all along. So all I've done is I've taken bits of pieces of strategies I've learned over the years, I've amalgamated them into something that makes sense to me, and I use it. But every time I get into a trade, I'm fully aware that it's going to go up or down, and I really haven't got a clue. I'll just get out when I've got some money in the bank. That's literally all I can do. And just pick indicators you like the look of. That's literally it. There's no code to crack. Yeah, it's going down. So my choices here right now of this trade are, I can either let it come back down into this propulsion gap and hope that that acts as support. And if it doesn't, get out. Or I can close it now because we've broken through. The reason for my trade was I was hoping this was going to hold up and it's not holding up. So I can either get out now or I can get out down here. This is 100% discretionary. It's down to me as a human being and me alone. That's it. There is no indicator now that can tell me what to do. I have to make this decision myself. So I can either take a loss or I can hang on. But I'm the person in the market with the risk. There isn't an indicator telling me what to do. And the indicator has no better understanding of this market than me. So why should I listen to an arrow or a squiggly line? What's that got to do with where this is going? This is going up if there's more buyers in the market, in the institutions, than there is sellers. If there's more sellers in the institutions than buyers today, it's going down. It doesn't matter what my indicator tells me. I know where the buyers and sellers are. That's an advantage. Other than that, I have no clue. And I think my problem, and the reason it took me so long to become profitable, was because I was a programmer. I worked on logic, and there's nothing that you can't fix as a programmer. Everything can be programmed to do what you want. You cannot do this with the markets. You can't program the markets. So I sat there for years trying to crack the code, as you say. There wasn't a code to crack. It's an impossible code because it's random. You can't find order in randomness. Every time this ticks up and down on this chart now is a completely random order placed by either an algorithm or an institutional banker to go up or down. Yeah. Whether this is going to continue down is literally down to whether that bloke has got 100,000 contracts or 50,000 contracts, because the bloke that's buying it, if he's got less than the bloke that's selling it, it's coming down. There's no indicator that can read that. It's chaos. It's completely random. But we know that patterns form in randomness. And the reason they form is because of buyers and sellers in the market. There's no indicator that can predict buyers and sellers in the market. It just doesn't exist. So, but we keep hunting for it. That's what we do. We try and find the solution. And this stop that I've got here, which is 27 pips, will either get hit or not. So I will either be 27 down today or not. What's my job now for the rest of this week? Make more than 27. When am I going to do it? I have no idea, because I don't know when the market's going to go up and down. And it's the whole trading at specific times of day. There are days when the market moves. There are times of day when the market moves more than it doesn't. I want to be on those times, not on the times when it doesn't move very much, because I've got more chance of making money when something's moving than it isn't. The only way you can make money in the market is when the market moves up and down. If there's periods in the day where it doesn't move up and down very much, why sit there and trade them? Go and do something else. Go and read Mark Douglas's book. Which is why I trade the London session and the New York session. The rest of the day I'm sitting around doing virtually nothing, because there's nothing to do. It's usually flipping around up and down and just taking everybody's money that's trying to find an edge in complete sideways chaos. Franco, left a training group because I always wanted to know why. Why they didn't care and lost. Tech tunnel vision. I don't quite understand that one. All trades, wide stop loss and TPs. Set, going to sleep. Yeah, good man. Letting the stew simmer. I trade better sleeping. Exactly. Franco's got an amazing point there. If you put a trade on and don't watch it, you'll make more money. I make more money out of my yen trades and my Aussie and my New Zealand trades than I do out of any other. My P&L proves that fact. And the reason being is because I'm asleep. I can't take off a trade in profit when I'm asleep. So I wake up and it's gone 3 times further than I thought it would. That's why I make more money. Do you think it's because some part of you are a perfectionist and that's why you look for the best system, or you hate and can't accept a losing trade? Yeah. You'll always try and better yourself. As human beings, that's what we try and do, isn't it? So if you've got a trade on here, I'll be like, oh, right, I'll tell you what, okay, so this one's not holding. What about this one? Let's try this one. Oh, well, that's not going to hold. Let's try this one down here. Yeah, we do that all the time, don't we? Stupid. All we're doing is we're opening ourselves up to more risk. So this isn't working. Close it. Out. Done. Trade's not worked. Get out with a small loss and then forget about it and move on to the next one. If you're never going to find an entry, and that's the key thing. And that when you watch the bootcamp, the thing that you will get out of the bootcamp is the main reason traders lose money is because they are trying to time the market. So your goal as a trader is to find an indicator or a price action signal that times the market to get you in and profitable as much as possible. The one thing you cannot time is a market entry, because you have no control over price. So if you think about it, what your goal as a trader is when you're learning to trade is to find the indicator, the system, the strategy, or whatever that gets you into the market and makes you profit more often than it doesn't. The one thing that you will never find is an indicator that tells you that, because nothing can predict the future. Whether this is going up and down or down on the next candle, no one on the planet right now can tell you the answer to that. Why do you think there's an indicator that can? I say it now and I think, well, that's a ridiculous statement. Why on earth have I been doing that for 14 years? Well, I haven't. I've stopped doing it. But why did I do it for such a long time? Because I believed it was out there. Do you think, when I say it, it just sounds ludicrous, doesn't it? What you're looking for is a future predicting device, a time machine, in effect. Something that's going to tell me whether this is going to go up or down next. Not even the guy sitting in Barclays now executing 100,000 contracts long right now. And I know he's sitting there because I can see his orders going in the market. He's going up, look. That means there's a lot of buy orders going in. Even he has no idea whether or not HSBC is sitting there with 500,000 contracts ready to go long in the next 10 minutes. Yeah, and he can move the market. He's a market maker. He doesn't know if this is going up or down. What chance do you stand of finding an indicator that is going to predict that for you? It doesn't exist. And as soon as you accept the fact that that doesn't exist and you clear your charts of everything and go, right, I'm going to watch price. What does price do? It moves up and it moves down, right? Why is it moving up and down? Learn the mechanics behind the market. Why is this going up and down? Why, when it comes down, does it stop and go back up again? These are the questions you should be looking to answer, not which is the best indicator to draw an arrow on my chart to tell me when to press a button, or which is the best EA to pass a prop firm. There isn't one. Prop firm passing is dependent on when you start an evaluation. Are you starting an evaluation with a strategy that's going to work for the next 2 weeks, or are you starting an evaluation with a strategy that's going to fail for the next 2 weeks? Because your strategy may well work long term, but it's going to have a 2-week period where it's going to fail. Whether you pass an evaluation has got nothing to do with your strategy. It's the time you do the evaluation that passes or fails. Because if a pretty range breakout, perfect example. Yeah, there's my 5-minute ORB today. Lovely. Yeah. If I take an evaluation with a 1% risk per trade and I start it this afternoon, and this afternoon's ORB does that, loses me 2.5 grand. Then tomorrow morning's DAX does that and loses me 2.5 grand. And then the next day does 2.5 grand like that, and I blow the evaluation. Does that make the opening range breakout strategy bad? No. It's got a long-term edge. I've tested over 60,000 variations of it. It works. What it means is the day that I started using it, I hit a bad run. Does it make it bad? No. What do we do with strategies? Why do we system hop all the time? Because we get a strategy, it looks great on paper, we test it, it gives us 5 good trades, and we go, this is it, I found the Holy Grail. Then it loses the next 10 and blows your account. You go, well, that was crap, throw it away. No, it just had a bad run. You didn't realize the next 25 trades were going to be profitable and make you a millionaire, did you? Oh, you didn't take them. Oh, why not? Because you had a bad run of 5 trades. That's just bad. You know, that's life. The ORB EA today, yesterday was the same thing. I got stopped out on my trade there and then it flew. What was bad in that situation was my trailing stop. It was 2 pips tighter than it should have been. If I'd have had a 25 pip trailer instead of a 20 pip trailer, I'd now be sitting in 4K. I'm not. Yeah, variations. As soon as you just accept, oh, well, this happened to me yesterday as well. I got taken out by 0.9 of a pip yesterday before a rally. 4 or 5 grand I would have made off the rally. Unlucky, just unlucky. But am I moaning the days where it goes without me 4 or 5K and all of a sudden I bank it and turn around and go, wow, that was amazing. I didn't do anything and I had 4 grand. Do I moan about those days? No. Because I know they're coming. I just got to wait for them. And I don't know which days they're coming because I can't predict the future. I know my strategy's got an edge. That's it. I know the market reversal alert shows me market structure perfectly on the chart. But it doesn't give me an edge. I decide whether or not I take that reversal alert there. Or this one short here. I decide whether I take it. The indicator doesn't know what's happening next. I don't know what's happening next. Is it a good trade? No idea. But if I like the look of it because it's hit a resistance area, I'll take it short down to here. Me, the trader, not the indicator. It's all about just accepting your fate. If you want to make money in this industry, you have to accept that you have no control over your income. Again, another question I get asked all the time. What's the strike rate of your indicator? It depends whether you're taking trades on this instrument, that time frame, whether you're awake at this time, that time. You're going to get a totally different strike rate depending on which trades you take. If you take every single one of them, I can give you a strike rate. But then I can't tell if your computer would have gone down during that one and you'd have missed that one that made 4 grand. You know, it doesn't matter, does it? Anyway, I'm waffling. It's good waffle. It's important waffle, but it's But that's what the bootcamp covers anyway. So go watch it. What advice would you give to pass a funded account? Just trade. It's like looking for a perfect wife. Yeah. And that's the thing, isn't it? You could have the most beautiful woman standing in front of you, right? And she looks amazing. She's an amazing singer or whatever, and you think, wow, that's my perfect wife. She opens her mouth and you think, oh my God, what? I can't live with that. Nothing to do with looks. You have the perfect strategy on paper. It's how the strategy is executed that makes it either good or bad. What it looks like has got nothing to do with anything, is it? But if you want to pass a funded account, you just got to trade, basically. Risk management is the most important thing, as it always is. So with every type of trading has different conditions. So a position trader, I don't care about drawdown. Yeah, my position trading strategy is based on market cycles. So I get in and out of the market on cycles, and I will take losses when I think I'm going too far in one direction against me, and I will use the profits from the other trades. Yeah, doesn't matter. You can't do that on a prop account because prop firms set a daily maximum that you can lose. So therefore, you have to use a stop loss based strategy, which tends to force you into hourly and below timeframes. So if you want to pass a funded account, you need to get really good at scalping. And if you're going to scalp, you're trading algorithmic chop, which is basically random. So you only thing you can concentrate on to pass an evaluation is risk reward. So when you take a trade, you make sure that the trades that you get into that work, you add to them to make more money out of them, or you let them run far enough to outweigh your losses. So to pass a proper valuation, set yourself a daily goal of 0.5% or 1% or something, and just aim for that target. When you hit that target, stop. That's the best advice I can give. What strategy you use is totally up to you. Obviously, find one that works, and has some kind of edge. RSI, if you want to use a 15-minute RSI, whoops, on the S&P 500. So if you'd have sold here, you'd probably lost that one. If you'd have sold there, you had a nice profit there. If you'd have sold there, you had a lovely profit there. If you'd have sold there, you'd have lost. If you'd have sold there, you'd have maybe made some money. Depends when you got out, you probably lost. If you sold there, you'd have lost. If you'd have sold there, you'd have made a nice profit. If you'd have bought here, you'd have made a lovely profit. If you'd have bought here, you'd have made a lovely profit, But all you've got to do is when you get in here because of that, make sure that that is smaller than that. And accept the fact that you're going to get stopped out 10 times in the trot. That's the only way to pass an evaluation. The reason everybody fails evaluations is because they let the psychology go and they over leverage or they over trade, and that's what blows it. That's why you fail. You always, every person you ever speak to, whenever they fail an evaluation, the reason is always the same. Why did you fail your evaluation? I hit my daily loss limit. Why did you hit your daily loss limit? Because I over leveraged. It's never I had 5 losing trades on the trot. It's because you over leveraged. My funded accounts, I trade with 0.25% risk. My evaluation accounts, I trade with 0.5 to 1% risk. Why? Because I need to get them passed as fast as possible. Why? Because they set me a time limit of 5 or 10 days to do it. No one in their right mind would trade with 1% of their account. So if you're going to trade with 1% on your account, what you're telling me is you've got a system or strategy that has never had a losing streak of 5 trades on the trot. Because if you think about it, that's what will blow your account. If you have 5 trades on the trot today that go wrong at 1% risk, you've blown your account. I may be wrong, but personally, in my 15 years trading, I've never found one. And I've tried a lot. There is no strategy out there that does not have a losing run. If you've got a 95% strike rate on a strategy, 5% of the time it's going to fail. If those 5% happen in a row, you've blown your account. Not that there is a strategy that's got 95% strike rate, but I mean, if there was one. Yeah. So the only way you're going to pass a funded account is by not over leveraging. So when you do your evaluation, if you're going to over leverage and try and get it done quickly, you've got to hope that you hit a winning streak. Otherwise, you're going to fail. If you want to leverage properly, you've got to hope you can get over the line within 30 days. Yeah. So every time you want to pass an evaluation on a funded account, look at their rules and work your strategy within that rule set. I took 13 days to pass stage 1 on the last one. You know, I've passed in 1 day on others. We've got news this afternoon. Retail news this afternoon. Yeah. So if you want to, go trade the NASDAQ this afternoon. Yeah. Easy strategy for you here. Let's say this is the NASDAQ and we've got the news coming up. Place a sell stop there and a buy stop there. Doesn't matter where you place them. There or there, that'll do. And do 2% short, 2% long. You've got a good chance of passing evaluation this afternoon. You only got to do 8%. Yeah. So if your sell stop is there, your stop loss is there, your buy stop is there, your stop loss is there. If this thing just goes bang, 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 you lose 4%. Unlucky. If it goes bang, 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 you've passed. It's that simple. There is nothing that can tell you whether this is going up or down this afternoon on the retail figures at 1:30. Nothing. No one can give you the answer to that question. You just have to play the game. And you're either going to be right or you're going to be wrong. Now, if you do that news trade 10 times, yeah, and 6 of them are winners at 10R, happy days. You could get stopped out on both ends of those 5 times on the trot. Now, if you do that, you're probably going to stop doing it, aren't you? But the next 5 are all going to be 10R winners, but you didn't take them. Why? Because you had a losing streak. So it's a crap system. It's not. You think it's a crap system because it's got a losing run and you're looking for the Holy Grail, which has got an 8 out of 10 win rate. It doesn't exist. So, I mean, we're all looking for that thing that doesn't exist. As soon as you, and that's what makes you a profitable trader. As soon as you stop looking for it and accept the fact that you've got no idea where this is going, you just have to press the button and hope it goes your way. Hope that the guys at that time in that bank are dumping the contracts in the same direction as you're dumping them. That's what makes you the money, nothing else. And unless you've got a hotline to Barclays market maker desk, you're not going to find that information out. So stop hunting for that and then just start taking trades and get out and get in and get out and get in. Just find a reason to do it. Yeah, market reverse alerts indicator, go short. Is it going to work? No idea. Is this going down now? Haven't got a clue. That one worked. Look, you got in here. You went drawdown for 26 pips. You had an upward run of 33. Successful trade. Now that was a successful trade if you took 20 pip profit. If you were going for a 40 pip profit, you're still in it. That's the difference between somebody winning, someone losing. Somebody's waiting for their 2-to-1 risk, right? So this here is a stop of 28 pips, right? So if I'm going to go with a 2-to-1 reward on that, I need to be taking, let's say 60. Let's say it's 30. I'm going to go 60, right? So there's my TP. There's my stop loss. There's my entry. Whether or not this trade is profitable has got nothing to do with whether it hits that or that. It's got to do with whether or not you decide to exit here or here. I could exit with 100% strike rate with 1 pip, but it doesn't necessarily make me profitable. So, you know, there is no answer, is there? Some people will have taken that reversal alert and will be out now because they've seen a reversal alert in the other direction with a profit. Yes, the profit is only 9 pips. Rubbish. but it's a profit. If it's your first trade of the day, you're 9 pips up. If you're going to wait for this line to get hit, good luck. This could just collapse all day now, couldn't it? This could just basically go from here straight down and stop you out. Who knows what it's going to do? No one. Your job as a trader is just literally to take a risk in the market and get out when you fancy getting out. Your job that you need to work on is doing that consistently with more profit than loss. That's it. There is no indicator that's going to give you any idea of where this is going at all. Support resistance is what you want to use. That's this is what I teach in the bootcamp. Yeah, this is why I have the wide range bar indicator on there, because these are good areas to aim for. We know that they get tested all the time. So if you're going to go short from here, take your profit here. Just you stop. And I think that's the other thing that really killed me for a long time. I was trying to find the strategy that gave me a really high risk reward, and that's the biggest problem, and this is where what really turned it around for me was discovering ADR and the statistics on ADR, which is what the ADR indicator does. That's what really changed my view of it. If I was getting in with a long position here, yeah, and stop here, and I was going for a 5-to-1 or whatever up there, realizing that there's actually a 60% chance that it's not even going to get past that green line. That changed my view on risk reward totally. It was like, well, hang on a minute, it's not very likely to get there, is it? If I want to get there today, there's only a 23% chance it's going to get there, or maybe a little bit less than that. So why target that? Why not target that, yesterday's high? Because we know yesterday's high acts as a magnet. So if the trade is right, I've got a very, very, very high probability of it hitting here. And I've got a very low probability of it getting up there. So go for the high probability. And you'll be right more, and you'll have more faith in your system and your strategy, and you'll bank regularly, and your P&L will grow. And if you've got a target of $500 a day and you make it on one trade, you'll stop over trading because you go for realistic targets. And yes, it's only a 1-to-1, but do I care? If my stop on this trade was down here and my target was there, I personally don't worry about it, because the chances of it coming all the way down here are pretty much the same as if it was going to go all the way up there. It's not likely to do that, unless there's news, obviously. It's more likely to chop around like this all day long, in which case I just take it off up here somewhere. Again, tight stops is what kills people. All these strategies that have got really high strike rates with tight stop losses, they just don't work in the real world. They're all curve fit. All these EAs that have these amazing 100% return in 6 weeks. Yeah, what a lucky run you've had. You won't find one that has lasted for 6 months doing that. It just doesn't work. But anyway, that's enough for today. I'm waffling. It's 10:30. I'll be back at 2:20 for the New York session. Obviously, just be aware of news. So 1:30, we've got retail sales. I'm not going to stream for that because I'm going to be back for the market open, but retail sales obviously is where everything's going to shift today. So big movements on the US dollar expected this afternoon. We've got Lagarde speaking as well, half an hour before the New York Open. May or may not move the euro depending on what she says. So just be aware of obviously those, but if you're going to come back for the New York session, obviously I'll be here for that, and we'll see if we can get a break on the Dow or the Nasdaq or both. Yeah, and then obviously unemployment for the Australian dollar tomorrow morning as well at 12:30 a.m. So if you're not around this afternoon, just be aware if you've got any Aussie exposure on, that's all going to be moving overnight in the Asian session. So big figure unemployment, very important to scorecard. Unemployment, one of the key factors we look at, unemployment. as to whether or not we should be longing or shorting something long term. So, all right. So have a good day. I will try and get the stream fixed, my layout fixed, so that I can actually draw with my pen and everyone can see it this afternoon, so that I can actually draw. Or I might find out if there's a drawing tool for Streamlabs, which there might well be. I haven't actually looked into it in any detail, so I'll have a look. All right, have a good day. Anybody needs anything, I'll be in the Telegram group. Otherwise, I'll be back at 2:20 this afternoon, and hopefully it's a profitable day, and see you then.